Testing 1 2 3. Let me see if this is streaming. All right, so we are live. All right, so what is going on, guys? Um, so I've been back testing. I've been watching some videos on YouTube. Shout out to Sai. Shout out to this other guy, and shout out to myself for kind of already having something going on that I was doing before with GJ and Gold. And I'm kind of trying to switch over to indices because they trend better. They trend better than forex pairs. And the way that I'm most successful is in a trending market. And yeah, so enough of this talk. Let's get straight into it. So what we're looking at right now is NAS 100. So if you look at this, NAS is literally just trending, man. Well, this is just freaking trend. From January to now, it's just trending. Even when it was trending downwards right now, that's just trending. It's very, very nice, right? Now, if we look at GJ, um, sorry, my internet is terrible at the moment. You'll see how like you have a lot of consolidation right here. Um, a lot of consolidation right here, more consolidation. It trends all right. Let's not say that it's not trending as well, but um, around this time is when I had my best trading in April and May, and then things got very ugly in June for me. And a lot of that has to do with the fact that forex pairs don't trend as well as indices do, right? And even when indices are kind of like consolidating, they're still like trending in a certain way, right? So enough of that, enough talking. Let's actually get into it. This video is how I will be trading NAS going forward. So this is going to be a banger fucking video. Banger, 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 banger. So let's get into it. So as you can see here, man, I've been back testing. Now, what you see here is the daily, the 4 hour, the 1 hour, 30 minute, and I'm dropping all the way down to the 1 minute. So pretty much like majority of the trades I'm going to be taking off NAS is going to be entering off the 1 minute, but it's going to be based off 1 hour or 30 minute or 4 hour key levels. So I'm going to explain this like this, right? And this is the best technology I thought about when I was just out, right? So imagine if you wanted to go and put your money up. Let's say you have $100,000. You have one bank that is backed by the FDIC, I believe it's called FDIC insured. So it's backed by $500,000. You have $100,000 and you put your money in this bank and it's backed, which means that if you lose your money, if they, let's say for example, anything happens where the bank goes under, you still have your money. There's another bank that's not FDIC insured. Are you going to put your money in a bank where you could potentially lose your money? Or are you going to put your money in a bank where if something happens, you'll get your money, right? So to bring that analogy back into trading, right? When you're trading NAS 100 or you're trading gold or you're trading GJ, think of this. Is your time frame that you're entering on backed by a higher time frame? Now, think of it as in, okay, why would I want to put my money into something, right, as in a trade that is not backed by a higher time frame, right? So what I mean is if you're trading off the 5 minute, 3 minute, the 1 minute, hell, even the 15, but it's not backed by a key level based off a higher time frame, it's a very low quality setup and there's a high chance that you're going to lose your money because it's not backed by a higher time frame, which means that a 1 minute entry but backed by the higher time frame as a 1 hour is more high quality than is someone who's just taking, let's say, trades because it's in a downtrend. So like if I were to just, let's say, do something along to this, okay, the market's in a downtrend, and then I just decided that I'm just gonna just take a trade, right? Oh, it's in a downtrend. Well, today's not a good example because the market was very bullish, but let's give an example right here. So let's just say, oh, I want to enter a buy. The market's in an uptrend, and I just want to buy the market right here because I see a fib move. So what I'm going to do with my Fibonacci is I'm going to draw out some fibs. And let's say I wanted to buy this market. So you're looking at the market, you're like, oh, price is very bullish. Price can go up. I see buys, right? And then you look at it, and then you realize you kind of draw your fib in the middle of nowhere, and you'll notice a lot of times where like you'll be in profit, then you'll be in drawdown, and if you try to hold the trade out, it doesn't play out. So when we look at this trade, we entered here, right? And we're targeting all the way up here, like we're trying to, catch a big move in the market. And the problem that I faced and a lot of people face is that they'll experience drawdown or they'll go through a lot of losses before they get the one trade that actually plays out. But then we don't think about where's that trade that played out at. When you look at a lot of your trades that are actually playing out when you're on the lower time frames or on any time frame for that matter without actually experiencing a lot of drawdown, you're at a key level, right? And you got to think about it as this. If the market is going to be creating higher highs and higher lows, where is the market going to be creating those highs and lows? At key levels. So why aren't we only taking trades at key levels? And that's what I fucked up on yesterday because I didn't do this. And I'm first time getting into NAS 100 and I wasn't doing this. And I was just kind of trading it. I was just looking for setups and I'll trade it. And then I would get in a lot of fucking drawdown. A lot of drawdown. So what I realize I'm going to start doing is entering at key levels. Key levels. Let's get this in our heads. Key levels. Entries off lower time frames based off a key level, backed by a key level. Every single trade that you take is backed by a key level because you have something backing it. The 1 hour support, the 4 hours demand zone, the 30-minute demand zone or support zone. If you don't have that backing the trade that you're in, then it's not a really good setup. It could play out. If the market is bullish enough and it's going to go up, it's going to go up. But what you'll find trouble with is being consistent. You may go through 2 to 3 losses. What I'm trying to do is perfect a strategy to where I can literally go on winning streaks. Winning streaks, winning streaks. Catch a loss, more winning streaks, more winning and more winning and more winning. The only way I'm going to do that is being selective and having a certain type of setup and criteria that I'm looking for. So what we're going to do is show you guys what I'm talking about. So what is a key level? Key level for me, the way I'm going to explain it, is an area of a higher time frame of a support and resistance zone, a supply and demand zone. Or if you guys use psychological levels, you can do that, but I'm taking that completely out the equation. All I'm looking for is key levels, higher time frame bias, 1 hour supply and demand zones, 30 minutes supply and demand zones, 4 hour supply and demand zones, 1 hour support and resistance, 30 minutes support and resistance, 4 hour support and resistance, daily resistance. I need something. I need something that is going to back the entry I'm at, and it has to be there. And then I'm going to wait for a break of structure at that specific level. So I'll show you what I'm talking about. So let's say you see the market in a downtrend, which the market is right here. Now I can't go that far back. I need to buy like the pro version of TradingView so you guys can see more, but I can only go back this much. But as we can see, NAS 100 is in a downtrend, but price right here breaks structure. So we have a 1 hour break of structure, and then we have price coming back down in this demand zone area right here. So we know that we're at a key level in the market, which is a 1 hour demand zone. So before we actually go into lower time frames, we already looked at the higher time frame and seen, okay, we are at a 1 hour demand zone. So I'm going to delete everything on my chart, and I'm going to start everything over. This video is going to be live streamed onto my YouTube channel. My YouTube channel is the same name as my TradingView. So if you want to watch this again, go on my YouTube channel. It should actually be on here as well for 30 days. So if you guys want to keep this video, you're going to have to download the video yourself. So what I'm doing is drawing up a demand zone, right? So this area right here is just a demand zone off the 1 hour. So this is the highlighted zone that we're really trying to pay attention to look for buys. But what we're not going to do is just buy the market right here. Even though we can do this, and this is great, and this is valid, we're trying to get a lower stop loss because, for one, a lot of us is on smaller accounts. You may only be trading with 300, 400, 500, 1,000, 2,000. You may be on a broker that it costs $70 just to even enter a 0.01. So if you want to only risk 200 to 300 pips or 500 pips or 400 pips or and equivalent to a points, 100 points, 200 points, 300 points, and etc. You're going to have to scale down. So we're looking at this and it's saying, okay, 600 pips, which is 60 points, 59.7 points. If you entered here, it'd be 45. So what I'm going to do is this. I'm going to scale down all the way to the 1 minute. So we already know we're at a key level in the market. So we don't even have to pay attention to all this top-down analysis we did. We're at a key level. The market where the market's at now is a key fucking level. It's a key level. Remind yourself this first. If it's not at a key level, there is no trade. There is no trade. If it's not at a key level, there's no trade. So now you scale down to the 1 minute. What you're looking at in the 1 minute is a break of structure and a directional bias that you see price going to in the higher time frames. So if you're looking at the 1 hour, you're like, okay, I see price going up. What you want to look for is that first break of structure at the Pacific key level on the 1 minute time frame. So what you can see here is a break of structure at the exact key level. So look at this key level. This whole zone is a key level because it's based off a 1 hour demand zone. So what we're looking at is 1 minute structure happening. That's super important because it's at a specific pinpoint area in the market that has the ability to shift the whole market back up. A 1 minute trade, a 1 minute setup is meaningless. If I go and just look at the market and I'm just like, oh, I see a 1 minute buy right here, right? And I go and just drop a 1 minute trade or even something like this, a fib, and I do something like this and it plays out. Yes, it played out. But again, there's nothing backing that trade. Nothing. There's literally nothing backing this trade. It's just a 1 minute fib that just played out because the market was bullish. That's not enough. If you continuously keep doing this, you will get drawdown. And you will go on losing streaks, and you may only have a 40 to 50% win rate at best versus getting in a 70, 80 to 90 range where you can start risking 10% to 20% and really compound and flip your account, right? So, because this is where I'm trying to do. So, price is at a key level. We already got that down packed. So this whole zone right here is a key level. So we're gonna go back. We're gonna add all this stuff. So this area right now where price is at this whole demand zone. So this is a highlighted zone that I'm really trying to pay attention to price action. And I want to see a break of structure at this specific area for me to buy it, right? And that exactly happens. What do we see here? So you see lower highs and lower lows happening this whole time. Price doesn't break structure until price hits the key level on the 1 hour time frame. Once price breaks structure at the key level of the 1 hour time frame, right, which is right here, if you don't know what a break of structure is, you got to learn all that shit first. So now we have the break of structure. Now we have the pinpoint area, the green light to enter the market, right? And again, I'm only looking at the market really 10 minutes after market open. So whatever that is for you, if you're Eastern Standard Time, that's 9:40. 9:30 is when the market opens up. I don't really want to look at the market before that because of the volatility that happens at market open specifically. It's just too much. It's too much at, specifically at 9:30. And what you see at 9:30 is a huge push to the upside. But again, there is no break of structure, so there's no trade here. So we're not getting in here because this is just no break of structure. We're waiting for the break of structure. So you're getting in here. So now when I draw my Fibonacci, and you don't need the Fibonacci, you don't need this. Price didn't even hit this point. So let's just remove the Fibonacci because you don't need it. But so now when we draw this and we're looking for a break of structure. So now when I look at this, what I want to see is high price on the 1 minute break this previous high at a key level. Price breaks this previous high at the 1 hour key level and takes off to the upside. Our take profits are going to be based off higher time frame zones, which is how you're going to catch big moves and know where price is going to, because price is going to go from zone to zone. The market's trending, right? All you're doing is like, okay, I'm going to carry it to the next zone or close it whenever you want to close it, right? So this zone up here, right? So that's where we're trying to take price to. We're all the way down here though. So we're looking at the market at 6:30 and we're like, all right, price is at a key level, and now I'm waiting for a 1 minute break of structure. So now you waited for that 1 minute break of structure. Is that key level? Now I can draw my buy and my stop loss. I'm gonna put only right here because again, if price is going to break structure and continue to go up, it's not going to break this low. Why would it break this low and go up at the same time? It's not going to happen. You can't go forward and backwards at the same time. You see what I'm saying? You can't go up and down at the same time. So that specific 1 minute break of structure is important because it's at a key level. That's the reason why we don't need to have a massive stop loss, because we're putting it based off structure because it's at a key level. Right? These are the pinpoint areas where price is going to reverse from and continue going up or continue going down. So this is where this buy is, and then we're going to take it all the way up here. That's a 1 to 3 for the day. Great. Now we do this again. Now you can hold it longer. Don't get me wrong, the trade went longer. The trade went to right here, but we're just taking it to that zone for that day. Now repeating it again. So now it's the next day. It's the whole new day now. So now what are we going to do? We're going to look at the market and see, okay, price is overall in a downtrend. We kind of took this counter trend move. Now price is at a 1 hour supply zone. This whole area is supply. It's at a key level in the market, right? And you're at this trend line touch. So the market is at this area where price can push down. It's at a key area. It's at a key level. It's at a key area in the market on the 1 hour time frame. Higher time frames, right? It's at a key area. Now what we want to look for is directional bias, right? We want to see price shift from that point. Now, we don't enter the market right here because this is not New York session. So what we're going to do is we already see prices at the key level, and I'll just show you that one just so you guys can see what that looks like. If you guys wanted to enter during London session, because sometimes people do that. Whatever's fine by you is fine by you. But this is the example we're going to be looking for. So what you can see price happening at this key level. You see price creating higher highs and higher lows this entire time. And then you see price break structure at the key level. So price break structure at this key level. And price creates this new low at the key level. Price is in a higher time frame in a downtrend. And now at a key area in the market, the 1 minute just broke structure to the downside. So that's telling you that the market now wants to sell off. So when price comes back up to create the first retracement, to create the first lower high, you're entering the market. Stop loss you can have over at this high, at this wick right here for 20 points, right? You're going to be in some drawdown of 150 point drawdown, or you can put a little bit higher. Let's say you give yourself a little bit of breathing room, and then you take it to the next key area. So now you go all the way back up to the 1 hour, and you're like, okay, where's price potentially headed to? Well, price can potentially head all the way down here to this key level in the market. So now I just dropped down to the 5 minute just so I can kind of just draw all the way down. So now that we got it all the way up here, we're going to bring this shit all the way down here as the targeted area. Now it takes some time, but that's where our first target goes, and it completely melts. Our stop loss was only 27 points. You're looking at reversal points at key areas, and you're going down to the lowest time frame and waiting for that break of structure at that specific point. Anywhere else is completely irrelevant. I do not care about these swings, highs, and these moves on the 1 minute if it's not at 1 hour, 30 minute, or 4 hour key levels. It has to be at a higher time key level. We're not trying to get in the market in the middle of nowhere. It's that entry or no entry at the key level. It's happening every day. And I'm going to show you. So now we're going to save this trade. We're going to save this trade right here. And we're going to go back up. And we see that price right now is at this key level. Why is this a key level? Because this is where this 1 hour high is. This is where this 1 hour support is, right? And then you have price break below the support, retest it, and then come a little bit lower. And then this is where we're going to get in the market for New York session. So we're going to go down on a 1 minute time frame. This is another key level based off the zone. And guess what happens? Guess what happens, right? You have higher highs and higher lows. And then you have higher highs and higher lows. And then right at the key level, at this 1 hour key level, right, based off this support, based off this resistance and this support, price coming back to this area is a key level. We know that the higher time frames is going down. So all we're looking for is a shift in the market to the downwards on the lower time frames. We want to see a break of structure. We have that right at that key level. Again, we're only looking at key levels and information based off that key level. That's it. I don't care about getting in here. I don't care about here, because what's going to happen is what? You're going to get reversed on, because 1 minute can break structure and still be valid on the higher time frames, because the hourly highs are up here and right here and right here. These are the hourly highs and the lows. These lower time frame swings are irrelevant if it's not at a key level. So there's no point in trying to get in here, because you're going to get stopped out. So stop worrying about trying to fib up and get in the middle of the trend. Stop trying to catch it. Stop trying to get in the train as it's moving. Get into the train at pit stops. You see what I'm saying? So if you're trying to get into a train, you're not going to try to run with the train and then try to jump into the train. You're going to get hurt. You see what I'm saying? Or you're going to wait at a pit stop. You go to the pit stop. So this is where the pit stop is. This is where the train's going to stop at the pit stop. Don't try to run into the market. That's why you're getting tripped up. That's why you're falling. You're catching through a lot of stop losses before you catch your big trade. It's because you're trying to jump into the market. That's what I try to do. I try to jump into the market, and then I'm getting drawdown, and then I'm getting the profit. But wait, why did I get in drawdown and then I get in profit? Where was price trying to go to first before going up? So you see that price is at a key level. This is at 30 minutes before market opens. I'm at 30 minutes after market opens, which is my gray area, which is important to backtest in the Pacific time that you're going to be trading in. And you see a shift in the market, which is right here. Where are we going to put our entry? Right here, because this is where price is pushing up. This is the break of structure. You have a support, now resistance. Where are we going to put our stop loss? Right here. Right at this high. Because it's at the key level. Where are we targeting? This zone. So this is now our second entry. You see what I'm doing? Now let's do it again. It's the next day. What are we looking for? A key level. What do we see here? A 1 hour supply zone. Now this day, you don't need to actually go into 1 minute. You can just enter off this supply zone and then have your stop loss at this high and just ride it down. So I'm going to ignore this one, but this one's a better one. The next one right here is a really good one. So you see how price creates its support. This is literally a perfect trade, because this explains exactly why I love what I'm showing you guys. So you see how price creates its support in the hourly time frame. It's a key level. Price breaks that level and pushes back up. Instead of me doing something like this off the hourly time frame and having 800 point stop, which is almost it's 800 pips, almost 1,000 pips, or doing 1,000 pip stop or 100 point stop, right? And kind of completely tanking my risk reward, right? Or if you're trying to prevent yourself from having hella drawdown, right? Because price can come even higher, right? Price doesn't just have to give you only 300 points drawdown, which is still kind of a decent amount. It can go even higher. So what we're going to do is we're going to scale down. We see that we're at that 1 hour key level. So now what we're going to do is wait. We see that price broke it, right? We see price push up, and now it's at that key level. Now what we're waiting for is that break of structure. Guess what we see right here? At the key level. The same trade that we took literally what? Right here? Look at this. It's literally a print. This same break of structure at the key level. You have a support, you have a high, and you have a break of structure right at the key level. Guess what happens the next day? Right at another key level. Oh, I missed it. The same thing. You have a support, you have a high, you have a break of structure, you have price retesting that key level. So where are we going to enter at? Right here. Where are we going to put our stop loss? Right here. Where are we targeting? Key levels. You're trading to level to level. Now, there's pretty much no levels for real besides this one right here. So that's like a 1 to 2 almost. So you just kind of just ride it. Just ride the trend and just see how much you can get. Call it a day. What are we going to do, guys? Repeat the same thing. So what are we going to do? We're going to draw out a 1 hour support and resistance zones. Where do we see the next support zone? Right here. So what are we going to do? The next following day, we're going to draw out our 1 hour zone. Right? What are we going to do now? We're going to drop down to the 1 minute. We already draw out the key level where we want to focus on price action. That is a specific point where we're focused on the price action on the 1 minute. What happens here? Breaks of structure. Again, we're not entering here because this is before the time we trade. We trade in this zone. So it's perfect, right? The actual break of structure happened right here. So I'll show you. So you have higher lows, and then you have a high. This is at the key level. Price fails to create a new high, which is showing you selling pressure. This low at the key level, that Pacific point, this area is so important that price created a high here and price broke because it's at a key level off the 1 hour. So when price creates a new low and pushes back up, it's showing you that it's selling time. So now, again, we're not entering right here, but you could have. You could have entered right here. This is that market open. Boom, we get the push down. So now, if you want, you can just draw out this zone. And then when the price breaks and retest it right here, you just sell it. Just a Fibonacci. You can draw out your fibs if you want. And then you can just take it down. Or you can just do something like this. Is that a support? You have a high, you have a support, you have price break it, entry, stop loss. Because it's at the key level area and it broke structure. So now we just write it down. And then you just get whatever you can get for the day. Cool. You got a 1 to 3.8. The next day we do the same thing. Actually, here goes another one. So what do we see here, guys? We see a 30-minute key level. Look at it. This support right here is a 30-minute key level. So what can we do? We can catch this trade, and then what we're going to do right here that we did on the hourly, drop back down to the 1 minute. And then what we're going to do right here, guys, we're going to wait for price to hit the key level and then break structure. What does price do? Hit the key level and then break structure. So now you have higher lows. You have a high. You have a low. You have a lower high. You have a lower low. Bingo. Entry point. You could have entered here, but let's just say you entered here. Boom. Entry point. Stop loss is 23 points. 23 points. And you have, literally, you have what? How much drawdown? That's 3 pips. What is that? That's 29 pip. That's 209 pips drawdown, which is nothing. It's like $2 to $3 with the drawdown. 3 point drawdown. Where are we trading to? To the next level. First level is right here. This is the 1 to 3. And then you can just write it down. The next day, what are we going to do, guys? Go in the hourly time frame and draw out our zones, right? Now, this is where it gets tricky. Eventually, the market is going to reverse. When you see that the market is very oversold and maybe this is more of an advanced trade. So maybe you see a reversal happening. Maybe you see the RSI, you see divergence. This is like divergence on like the hourly time, the hourly or the 15 or the 5. This is like divergence. So if you want, all you literally have to do if you see a potential reversal, right, for this day, is wait for that lower time frame breaker structure. So high, low, high, low, high, low, high, low, high, low. So now we're still no trade. Uh-oh, we created a new high. Entry point. Stop loss 35 points, 32 points, 33 points. What are we targeting? All the way back up. This zone, that zone, this zone, that zone, this zone. We're going to ride the whole thing up if it's a potential reversal that you're projecting, right? So let's say you didn't catch this 1 to 22. Let's say you missed this whole day. You kept trying to sell. Maybe you did something like this. And then you got stopped out right here. That's fine. Because all we're going to do is just repeat it. So now what we're going to do is see we have a key level. We have a support. We have resistance, resistance. We broke the key level. So now we're going to drop down to the 1 minute time frame. There's no trade right here because we don't enter here. Any trade that we would see is right here. There's a trade. But guess what? Since it's at a key level, since it's not at a key level, what happens? We get some profit. If you close out, you're lucky. You close out. Maybe you put your stop loss here. You got lucky and you maybe made some money, but eventually you would have got stopped out. But guess what happens at the key level? You would have had to wait it the whole fucking day. But guess what happens? At the key level, we have a breaker structure at 9 a.m. What do we have? We have an entry. We have a 34 pip, 34 point stop, and we're gonna ride this baby to the first key level, which is right here, which is the 1 to 3, and then we're gonna ride it and ride it and ride it and ride it. Cause what? We take trades at the key level, baby, and we get this whole 1 to 8. Now, this is a tricky day. Yesterday, it's a tricky day. So yesterday, price was at a key level in the daily, which is going to have some sort of effect on the market. Even if the market wants to go up, if it's at the daily time frame key level, you're going to see some sort of selling pressure, right? And that's what ended up happening. So this day, price ended up pushing down, but all you had to do was just draw out your 1 hour key level. So even if you took losses here at this 1 hour key level, because here's a key level where this is a 1 hour demand zone that you would have been in profit and then got stopped out, that's fine. You're going to lose trades. But guess what happens at this key level where you could have got your entry? Right at this key level. Entry point. Stop loss. If you put it right here, you probably got stopped out. If you put it a little bit below this key level, like right here, which is 36 points, would have played out, which is nothing. That's only 360 pips. Take it to the whole zone. The first trade, price comes right here and then it plays out. But if you would have just held it, you would have caught this whole move. But let's just say you ended up not making no money today. This is a dead trade. Guess what, guys? Guess what happened today? Price comes right back to the key level and actually hits his demand zone. So if you go in a 30-minute time frame and you look at this demand zone right here, so I'm delete everything on my chart. This is the 30-minute demand zone. So right here, we want to see a 1 minute breaker structure at this key level. So now I'm going to drop down to the 1 minute. Guess what happens? A break of structure. Boom, right here. The break of structure. We enter at 10 minutes after market open. This gives us the green light. This is our entry. We could put our stop loss right here at this low right here for 40 points. And then we just ride this baby up for today. And we catch a 1 to 8.7. There you have it, folks. That is the strategy. Key levels, wait for a 1 minute break of structure at the key level, ride it from the next level to next level. That's it. I have a question. I would like to trade ES1, but I'm outside the US. Is it possible? I have no idea what you're talking about. I don't know what that is. But I'm gonna end it here, folks, because I know a lot of you guys have short attention spans. I know I do, and it's hard for you guys to digest everything. This is a 36-minute video. Thank you for watching, and that's it. That's all we have. So again, let's talk about for tomorrow, right? All we're gonna do for tomorrow is look for a key level. So this we gotta let the price do its thing. We gotta let price do its thing. Hopefully, price is at a key level and it's not just like bullish, 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 right? So let's just say this is a zone that we're looking at on the hourly. So we can draw out this zone, like, okay, let's see price do something there or something. I don't know. It's so early. It's not even the end of today. So we gotta let price breathe and play out and formulate and do all the things it's gonna do and whatever. So when we look at the daily time frame right here is a key level. This is a daily time frame key level. So we want to draw this one out, and we want to really be paying attention to that. So I'm gonna have that one highlighted because if price gets there, we might be sells for tomorrow. If price ends up getting to that point, just because price is at a key level, a daily time frame key level. Right, so I'm just gonna have the only zone I'm gonna have drawn out for right now is right there, and then I'm gonna have this 4-hour key level drawn out right here. Right, so this is all I'm gonna have for right now for NAS 100. Everything else is irrelevant. Right, and tomorrow we're just gonna let price do its thing, and we're gonna go from there. So thank you for watching this video. Rewatch this video, download it, do whatever you have to do. Remember, if you see what I talked about, I did not say do any of this. I did not say draw fibs in the middle of here and try to do this. We're not trying to catch Fibonacci's like this. This is going to work. This does work. But if you consistently do this, you're going to lose. You're going to have losses, unnecessary losses. You can be profitable, but you're going to have unnecessary losses. The goal is to be as efficient as possible. Efficient as possible. That's it. That's your goal, is to be efficient as possible. Improve, right? You can have a good thing going and still improve on it. You can have an iPhone. You can have, let's say, an iPhone 12. You can have an iPhone 14. It's innovation. It's improvement. We're all trying to improve, right? You could be profitable 2 years ago and be more profitable 2 years later. To be more efficient, to have a better win rate, and to go about things more elegantly. That's what I'm trying to do. To prevent myself from having drawdown, from prevent myself from having cluster losses that could be prevented. It's just a better way. Enter at key levels. Hope you guys enjoyed this video.